Hi YouTube, welcome back to my YouTube channel. I hope you guys are loving the new interface, right? Because for me, I'm loving it. I'm really loving it. I sort of like copied it from a bigger YouTuber and a bigger trader as well, but it makes sense to me. So let me first explain the psychology behind it. Is that oftentimes we as humans we tag the color red, we tag it as something like danger, being bad, and all of those things. So subconsciously or consciously, we might not even know that it is affecting us, or we are seeing it that way as traders. So for me, I just felt like, aside from the aesthetical part of it, I just felt like this is in a way might actually be true, in essence that oftentimes we are just looking at our trades, we are looking at what we are doing, and when we are in a loss and we are seeing that red, there is this form of emotional distress that it does give for us seeing the color of red, because it depicts danger. So pretty much that's it. The major psychological reason why I changed the template into something more white and then just without red and stuff. And also one of my mentors that I watch a lot, Tom Ogad, he uses pure white, just white and black candles. So I feel like that also would be one of the reasons why he uses that in his chart. So let's get into this current trade that we are in. Let me sort of like break it down. So this will be a little bit of previously about what happened yesterday, right? Or sorry, from Monday through to yesterday. So I had a short trade from here. I had a sell from here on Monday morning. And at this point, sorry, just a second. At this point, my trade was in profit about 1 to 4. So according to my rule, what I should do once my trade gets to 1 to 2 in profit is I break even first. After I break even, I start observing market structure, right? So when after my trade got into profit, I moved my stop loss into break even. Then when I woke up the next day, which was on Tuesday, I saw my trade going well. Based on what I should have done, and according to my plan, should be that I'm looking at my entry time frame, which is the 15 minutes time frame, and I'm monitoring the structure. So what I should have done was moved my stop loss from here down to here. Like, this was the structure, this was another structure. So this was the last structure, right? This area was the last structure that eventually got broken. So my stop loss should be at this area, and then I should have gotten stopped out for 1 to 2.3, right? So I refused to do that, and then I left my stop loss at about 1 to 1 in profit. Sorry, I left my stop loss somewhere here above this structure, I think, and then I got stopped out after, because I was hesitating. I was feeling like, oh, this trade should go well, pound is weak, blah blah blah, all of those things, but the market was saying something else. So what I just want to say is, because to be very honest with you guys, this trade in a way sort of got to me because I was in profit of 4%, right? And 4% is huge. It's something that I could close out on. Then on my challenge phases, I'm halfway done. On my funded account, I'm getting prepared to get payout, right? So that happened, and then I actually talked myself to make sure that I'm in equilibrium with the market. So initially, before today, I was looking at, there is a probability that GU is currently in a range. That is what I was seeing, right? I was not expecting that CPI would drop. This is just based off of my own hypothesis, right? So when market popped up yesterday and eventually got to this zone, so I had a sell also from here on Friday. I sold off from this zone on Friday, and I was able to cover my trade for, I think, about 1 to 3. So I had a sell from this structure, and then I closed out somewhere here for a 1 to 3, I think. Let me just put my 20 pip stop loss. Yeah, so I covered my trade somewhere here for a 1 to 3, and then I just call it a week. So that is that, by the way. So when market got to this structure, I saw this sort of like squeeze and hesitation, right? I saw that market was making higher highs, but consistent lows, higher highs, and then when it does as if it wanted to break this high, right? It broke the high and immediately came back at 7 o'clock, similar to what happened here. So this is also the importance of looking at time. For me, time is one of the most crucial things for my trading, right? I don't get into a trade until 8 a.m. UK time because I'm currently in the UK. I don't get into a trade 8 a.m. UK time. So that was exactly the same thing that happened here. Market dropped down. You can see this squeeze, this sort of like lower lows, but it was not moving very well. Price was squeezing, right? So 7 o'clock candle popped very well. If you go to the 1 hour time frame, you'll see what I'm saying. Look at it here. 7 o'clock candle popped very well, and then 8 o'clock candle immediately reversed it, forming a tweezer bottom on the 1 hour time frame. So when this happened, I sort of put it as a memory of, okay, this is what price did here. Let me see what's going to happen here. So when I saw similar thing happening here, my thought process was that if price creates my favorite pattern, which is I call it inside bar, but it is not the normal inside bar. For me, I call it inside bar formation, right? So it created my favorite pattern, and then I just wait for the push to the downside. So once it pushed to the downside, I put a limit order and then my stop loss above the last structure that I created. And then you can also see that eventually it came to form head and shoulders, right? Formed head and shoulder, and this was the neckline. So now we have broken the neckline. It was actually CPI news that pushed to like force it to make this break. So what am I looking at on the chart? Currently now I'm looking at probability of maybe a retest of this, and then we'll continue to that side. But that's not the talk about this video. The talk about this video is what made me take this trade. So when I saw this squeeze, and then this higher high was created, then we had a reversal back. Immediately I resorted to getting into a sell with the prediction that market is going to drop from there. So if you look at the 1 hour time frame also, you will see that the same thing, tweezer top, 7 o'clock candle, as you can see, then 8 o'clock candle, the same thing, tweezer top, tweezer bottom. So I'm reading this as, okay, this is looking possibility of a range. If we break to the upside, I'll keep buying. If we break to the downside, I'll keep selling. But while we are still in this range, I will sell at this top and then I'll buy at this low. So pretty much that's just what formed the decision for me to take a sell from there. And then as you can see, market actually sold off a little bit and then came back to my entry, almost played around. But my decision was, if we have a candle that closed full body above this structure, right, then that way my decision has been invalidated. So I kept on holding, and then before the close, before the news, we had this break back down to the downside. Then I had a confirmation that I'm just going to hold my trade and then just relax and see the outcome. So when CPI news came out, it just flashed down very fast and then it was quick. So the trade has gone about 3.1 to 3.6, and as you can see now, it has formed triple week rejections, which is potential and possibilities of buyers around this area. For me, I don't really see any structure. I don't really see any market structure as to why market is reacting. Maybe this is why market is reacting at this area, but for me, I don't see it as a valid structure here. What I'm seeing as a valid structure is this area. But regardless, as I've said earlier, what I'm looking at overall is, if GU continues in this range, I will sell at the high, buy at the lows, and eventually when it breaks, because this is a 100 pip move, 100 pip range, right, I would love to maximize that. So pretty much that's it for this video, guys. I hope you learned something from it. What I also want to say is that as far as I'm concerned, trading is much more of psychology than all these charts. You can get charts, you can get your strategy, your pattern, however you want to trade. You can get and understand them in about 6 months to 1 year. And then it's going to take you the long walk of maybe like 2 years, some people 5 years, some people 3 years, before you get your thinking right, an approach to which you are understanding all of these things. So now, based off of what happened to me yesterday, I messed up my trading plan. But for some people, they'll be like, oh, they'll start rolling around. I fucked up, I messed up my trade, I should have done this, I should have closed out. Yes, I should have done all of those things, and it was very painful because right now, I have, let me see if I can share it with you guys. I have, just a second, I'm gonna open funding peeps stuff. I have an account that is coming up right now, so I'm gonna share it with you guys. Funding peeps, yeah. So this account is in phase 1, and if I had closed the 4% from yesterday, and then together with the 4% I made today, all together, right, will have made me pass this account in 2 days, and then I move on. And also on my, I have an account here on my FTMO. Just a second. As you can see, oh, okay, my camera is not showing. Just a second. So FTMO challenge account, and today I was able to make 5% off of from that CPI move. So now 5% plus 4% of yesterday will have given me 9%, right? And then that way I'm just chill, and then I'm like, I just need 1 more percent for me to pass the account. But regardless of that, I have made the mistake that I will make, and the best thing is to just put yourself in equilibrium back to the market. It's called, like, this is the purpose of this trading in the zone thing that they talk about. Put yourself back in equilibrium with the market, right? And then be able to see your next trade. So overall target for what I'm looking at is for market to still come back to this place. But I have already taken my profit. I have closed my trade. I'm not going to come here and pretend as if maybe it's perfect or maybe I did execute the best. No, I'm a growing trader. I'm advancing, and for me this year I'm just doing me, my own way, what I see, teaching myself, like focusing on myself, cutting out all of the noises that I've been sucking in for the past 2 years. Just focus on what I know, what I have seen and I have back tested for more than 10 years to see that it has been working. I just want to stick to that and then just stay. So pretty much that's it for this video, guys. I want to keep it short, but it looks like I'm talking too much now. I hope you learned something from it. Remember, trading is much more than all of these charts you are seeing. It is what is in your head, how you're able to control it. The times that you take a loss, are you able to bring yourself back up to take the next trade? Are you in pain that, oh, you took a loss, or you're in profit, you let it all go back? Because for me, I'm okay with letting profits turn into loss, but to a particular limit based off of the type of way that I have created a rule for my trailing stop loss plan. So pretty much that's it for this video. Thank you so much for all the support. Those people watching, I'm very grateful. Thank you so much. That's it for this video, guys. Peace.